Good afternoon, and welcome to the Knoll Inc. Second Quarter 2020 Question and Answer Session. This call is being recorded. This call is also being webcast. In addition, this call may offer statements that are forward-looking, including without limitation statements regarding Knoll's long-term revenue and profitability growth goals, future outlook for the industry and economy, ability to integrate acquired businesses, and expectations with respect to future leverage. These forward-looking statements are based largely on the company's current expectations but are subject to a number of risks and uncertainties, certain of which are beyond the company's control. Actual results may differ materially from forward-looking statements as a result of many factors, including the factors and risk identity and described in Knoll's annual report on Form 10-K and its other filings with the Securities and Exchange Commission. These cautionary statements are particularly relevant in the current environment where the COVID-19 pandemic has created significant uncertainties. All of our forward-looking statements today should be considered within the context of that uncertainty. The call today may also include references to non-GAAP financial measures. Reconciliations of these measures to the most comparable GAAP financial measures and are included in the earnings letter released earlier today. I will now turn the call over to Andrew Cogan, the Chairman and CEO of Knoll, for opening remarks.
Thank you, operator. And good afternoon, everybody. The second quarter of 2020 wasn't like any quarter we've ever experienced. It was a true test of our people, culture, agility, and strategy. In that context, we are pleased to report solidly profitable, adjusted second quarter results, as well as the progress we have made responding to the COVID-19 pandemic and its impact on our communities, our people, and our clients. From the start of the pandemic, our focus was really fourfold. First, keep our people around the world as safe as possible while maintaining as much of our operational capabilities as government mandates and safe working practices would allow. Second, protect our financial position, maximizing liquidity and scaling the business to ensure we remain profitable and cash flow positive. Third, lean into the marketplace challenges in front of us with the thought leadership and product support to help our workplace clients retrofit and reimagine their offices for return to work and work from home. And fourth, leverage our brand reputation, broad product offering, multi-channel platform, and marketing capabilities in the residential space. In short, taking advantage of the pivot to work from home and the increased focus on residential life resulting from our working, schooling, and exercising where we live. We believe that those businesses with a brand reputation like Knoll, founded on the belief that good design transcends rigid boundaries of where we live and work, backed up by a broad and growing range of products and price points with multiple physical and digital paths to market and lean, agile cost structures, will be the ultimate victors during this unique time. It's also an interesting moment where more fluid and affordable contemporary live-work brands like Mudo and Fully can thrive. For the past 3 years, as we rode the wave of the residentialization of the workplace in North America, we focused with great success on driving Mudo through our contract dealer channel. Earlier this month, we expanded Mudo's reach through our own direct-to-consumer e-commerce channel at Knoll.com, pairing the brand's crossover designs with an expanded range of Knoll products for the home office, as well as living and dining spaces with free shipping in 1 to 3 days. And we are very pleased with the growth in traffic and sales activity on the site in the first 2 weeks. Both Fully's position and the Knoll plus Mudo initiative also enable us to take these brands direct-to-consumer ergonomic offerings to our corporate clients, providing their employees with online access to the right furniture for working from home. However the future plays out, we think we are uniquely positioned to succeed with our range of brands and price points. Now we'd like to open up the call to your questions. Thank you.
Thank you. Ladies and gentlemen, to ask a question, please press star then 1 on your touchtone telephone. Again, if you'd like to ask a question, please press star then 1. Our first question comes from Greg Burns of Sidoti & Company. Your line is open.
Good afternoon.
Hey, Greg.
So maybe we could start off with where you ended off, Andrew, on the Mudo and your e-commerce opportunity. I think you were working on developing like a dedicated Mudo e-commerce channel, but now maybe it seems like you might have pivoted and now you're using your Knoll channel. But can you just talk about your e-commerce strategy in general, and specifically, your expectations for the Mudo brand?
Sure, absolutely. And I think our strategy hasn't changed. Our goal is early in 21 to operate and launch a dedicated Mudo.com channel for North America with a vastly expanded range of offer. But we really felt there was a tremendous opportunity now, particularly as people were pivoting to work from home, to make Mudo products accessible in the North American market now, particularly those products that were geared towards working from home. So that's exactly what we've done. I mean, the strategy is really as follows. We have with Fully, it's almost like a good, better, best strategy. With Fully, we have a brand. It's a B Corp. It's got a great vibe and attitude. It's a very young and contemporary brand, and it's really focused on ergonomic offerings in the height adjustable seated tables and seating, and then the accessories. The computer accessories. I'm sitting at a fully height adjustable desk now with the outlet cord on the desk and the Fully Light. That's geared towards that kind of ergonomic home office, and they're really pros at that. The idea now with Knoll plus Mudo.com was to really include a broader range of our ergonomic seating, our own height adjustable tables, and then start layering in the pieces that ship in 1 to 3 days in most cases, and some in 1 to 2 weeks, that can not just furnish your home office workplace, but the living spaces that are contiguous with that, and where you can mix in the kind of iconic living, dining, and outdoor pieces to create a holistic environment for someone who's both working from home and spending more time living from home. And so it gives us, Fully's got more of the entry-level price point. Our price points are a little bit higher. With Mudo now, we have a range of price points and kind of, the good range, and then with the Knoll Studio Classics in the better range. So we think there's a tremendous breadth now, and the market opportunity here is so large that we can segment it and serve it in different ways. And certainly, since we've launched this, and again, albeit the comparisons are easy, but we're seeing 50% increases in traffic from where we were a year ago. We're seeing 500% increases in orders. We're seeing our conversion rate, quadruple, and we're seeing the volume per day steadily grow over the first 2 weeks. So I think we're onto something. Fully's e-commerce business was up 130% in the second quarter. Ours doubled, but we're just scratching the surface here. And I do think this will be a more permanent part of the workplace mix, and I think Knoll is incredibly well positioned to be a player here.
Great, thanks. Then maybe we could just talk about, you gave some color in the press release around order patterns, but could you just walk us through how orders, particularly around the office segment, trended throughout the quarter and how they've looked in the early part of July so far?
Yeah, sure. I think if you've seen the BISMA data, I think, the industry was down about 33% in April and 38% in May. I mean, those were the two of the bleakest months for us. But I think what was encouraging was in June, we saw a nice sequential improvement in order patterns from the levels we saw in April and May, a lessening of the rate of decline. And it also kind of correlated. We've been very carefully tracking new opportunities that are being entered into our Salesforce funnel, because I think that in some ways right now we're all trying to get a handle on what the future looks like. And we look like we really troughed in new opportunities be entered in May, and they were down pretty much in line with these order numbers. And then we saw a nice sequential improvement in June. So I think there was maybe some bottoming and then a much more palatable level as we got into June. I think the other interesting thing is if you look at kind of the first half, our orders and sales declines pretty much tracked each other in the first half of the year. Orders were stronger in Q1, shipments were a little weaker in Q2. Orders were weaker, shipments were a little stronger, but I think they kind of leveled out as you got through the quarter. And I think that's why, if you look at our guidance, we're talking about a 20% decline in the back half. That's certainly better than the numbers we were seeing in April and in May on the workplace side. So, I think the other thing to remember when you think about Knoll specifically is we're probably one of the most diversified players in our space. Today 25% of our activity is residential. That includes now over 10% that's e-commerce driven, which is obviously growing very quickly. And then if you factor in our strong position in government, which is 17% of our revenue, and that sector actually we're forecasting that to grow this year with federal outpacing state and local. I think you get to a point where over half of our business, or approximately half our business, is not pure play commercial office exposure. And again, I think right now that diversification, and remember, the diversification in categories that are higher margin, we think really will serve Knoll well through this, and those are categories we're leaning very hard into without abandoning the opportunity in the traditional workplace market as clients retrofit and reimagine their workplaces.
Okay. And then lastly, could you just talk about the rationale behind issuing the preferred stock as opposed to maybe just working with your bankers if you felt like you were going to push up against the covenants? Just because it seems like where EBITDA's shaking out here, if this is the worst of it this quarter, it doesn't seem like you were going to be, that 4% threshold was going to be materially breached, but maybe not. But maybe you could just talk about the thought process behind that capital raise.
Absolutely. Well, I think firstly, we enter the back half with a bulletproof balance sheet. We've got $380 million of liquidity. I think on a pro forma basis, our leverage is half of our 4.0 covenant. I think the thinking behind the capital raise was really twofold. One, I don't think anyone knows what the future holds right now. And we were able to attract capital, I think, at a very favorable rate, 4.5%, an up 45% conversion price with an investor who has an appreciation for the space and the brand, number one. Number two, we're very focused on the fact that we think there are going to be significant opportunities on M&A front as we move through and come out of this. And we believe we can continue to pivot Knoll towards a higher margin, maybe more digitally native, residential mix in our business of high design, high margin businesses. And we really felt we could use some capital to do that. So I feel like we're in a phenomenal place now to take advantage of what we are sure will be opportunities from others that aren't as well positioned as Knoll, number one. And then number two, frankly, I think it was smart just to have some more breathing room from a leverage and a covenant standpoint. I can tell you, having that capital, if you look at the operating expense guidance we gave, we were, I think, last quarter talking about $60 million of operating expense reductions, and now we're talking about $50 million. Well, in this period, we've released about $10 million of investments that we think will drive better performance both on the residential side and on the workplace side of the business. So I feel like we're a little bit less constrained now, or a lot less constrained, in terms of investments we think that will allow us to continue to outperform both on the top and bottom line. And I think that freedom was a smart thing for us to do proactively. And so we're very comfortable with why we did it, and I think what the outcome and the benefit to Knoll and all our stakeholders will be.
Okay, great. Thank you.
Thanks, Fred.
Thank you. Again, if you'd like to ask a question, please press star then one on your touchtone telephone. Thank you. Our next question comes from Stephen Ramsey of Thompson Research. Your line is open.
Hi, Stephen.
Good evening. Hi. Hey, Andrew. I guess maybe to start with on residential sales, good performance clearly compared to workplace. Maybe can you talk to, is that due to the broader shelter in place driving more spending on homes, or maybe talk to what is unique to your trends and how they evolve through the quarter?
Sure. Well, I think, listen, as we went into these lockdowns and everything, we immediately saw, an explosion in demand for Fully's work from home furnishings. And I think, to be honest, Fully probably could have shipped quite a bit more in the quarter if we weren't somewhat constrained in terms of just inventory levels. So I think we were really taken back by literally the doubling of demand. I mean, e-commerce is up 130% in the quarter. So we had to spend some time really replenishing inventory, and some of Fully's inventory comes from Asia, so there was some lag. There, but I think the good news is we started producing tops for Fully. They are in a much better inventory place now. Their lead times are coming back down, and I believe as we get to August, that Fully really will be able to unleash the full power of that. We've held back marketing investments and spending because there's no point driving a business beyond that which we can fulfill it. But we clearly see the demand there. It's enduring. We haven't seen it let down since the middle of March. And, we don't really have our foot on the gas right now in that business because we're dealing with replenishing the inventory. So I think come August, we'll be able to step that up. And I would be, I'm super encouraged about the prospects there as we move forward, regardless of whether, we're going to go back to work, and we're going to end with a balanced environment, but clearly work from home, which has its challenges, will be a factor going forward, kind of one of the strategies I think companies will employ. And I think, frankly, the more time people are spending working from home, and I saw it myself, that you start working at your dining table and with whatever I had a Baron dining chair and a Schultz dining table. I started working there, but it's a little uncomfortable spending 10, 12 hours a day. And then, then I invested in a high adjustable table and a Knoll regeneration, task chair, and I can work much more efficiently and much more comfortably and healthily. And I think you're going to see that continued investment in that work from home category. The other thing that's happening is everyone's, in their homes and they're walking around saying, this rug looks a little worn out. This sofa's kind of had it. And I think we're starting to see, that, and that's really the idea behind the Knoll work from home, Knoll plus Mudo work from home, is that it's not just about the ergonomic piece of it, which Fully does a nice job of, and we do a nice job of, but it's about all the other rooms and things. So I think you're going to see, the home move up in terms of the kind of discretionary ladder of what consumers are spending on. Folks aren't traveling, as much. And so I think there is more discretionary dollars that will go into the home. Even in the higher end with Holly Hunt and stuff like that, as we've been able to reopen our showrooms and all that, we're seeing activity at the higher end come back and everything. And we were really constrained. We had actually two Holly Hunt manufacturing locations shut down in the quarter, and many of the residential showrooms were closed. So as things have started to reopen, close a little bit, back and forth a little bit, but we are seeing that business, trend in a positive direction as well. So, I do think people will invest more in the homes, and I think Knoll as a brand, is a brand that's fluid. It lives in the workplace. It lives in the home. We've got products that cross over. I think it's a tremendous opportunity for Knoll if we can make ourselves accessible and easy to do business with. And that was really the philosophy that the team embraced as we launched Knoll plus Mudo work from home. And go on the website. It works fabulous. Easy to order. We ship in 1 to 3 days. Shipping included. We're in the midst of a sale right now, which is going great. So I think there's a tremendous amount of upside for Knoll here.
Great. And then thinking about where backlogs are, how has the backlog picture evolved on the workplace, on the office side of things, and will that be a sales driver in Q3, or are backlogs at pretty normalized levels, and therefore, would new orders, would those go out to customers in a timely manner?
Well, I think we are now, operating pretty much on time, things coming in and things going out. Our team did an amazing job, frankly, in the midst of the pandemic, closing our facility in Grand Rapids and moving production there to both Michigan and Pennsylvania, and doing it as seamlessly as one could in the midst of a pandemic and everything. And so, I'd say probably backlog's a little bit elevated in terms of what we have still to work through. Again, as I mentioned, Holly Hunt and some of our other businesses weren't really shipping. Dates Weiser wasn't really shipping. Knoll Europe wasn't really shipping for a meaningful chunk of the, probably half or 2/3 of the second quarter. So I think they have some backlog to move through. But again, as I mentioned, orders were stronger in Q1, but shipments weaker. Then in Q2 we had slightly better shipments, even though we had those headwinds. But orders were weaker. I think it starts to normalize in the back half now, and we would expect orders and shipments to track in line. And again, we talked about, approximately a 20%, blended decline with, workplace being weaker, and I would expect residential growth.
Excellent. And last question for me on sales expectations for the second half. That down 20% range, is that somewhat even in Q3 and Q4, or do you expect Q3 to be greater and then Q4's decline much more modest, or if you have any trend line there?
I think at this point we're saying that's what we expect it to be pretty evenly across the back half. I don't think we could really give you credibly more color than that right now.
Great. Thank you.
Okay. Thank you, Stephen.
Thank you. I'm showing no further questions at this time. I'd like to turn the call back over to Mr. Cogan for any closing remarks.
Great. Thank you all very much for your continued interest in Knoll. I hope we've made clear in this call why we think Knoll is different than other players in the space with our much greater residential mix, with our government mix that we think we're well positioned to do as well as one can in this environment, that we've got a bulletproof balance sheet now that gives us the flexibility to take advantage of M&A opportunities and breathing room to make the kind of strategic investments that will allow us to thrive and come out stronger on the other side. I would like to close by commenting on our commitment to diversity and inclusion in creating opportunity for associates of color at Knoll, building on our leadership in LGBTQ equality. Modernism design was born as a means towards social good, and Knoll was founded on the principle that modern design could make a difference, improving the quality of the way we live and work. By extension, good design is agnostic about the color of one's skin, responding to the universal desire for utility, joy, and beauty. With so many suffering, we are taking this moment at Knoll to recommit ourselves to leveraging the power of design to build a fairer world and a Knoll that is more reflective of the communities where we live and work. We look forward to working with our Diversity Inclusion Council to make meaningful progress here in the months ahead. Across the constellation, Knoll associates are demonstrating their commitment to teamwork and client service, many in ingenious and new ways. And we deeply appreciate, and I deeply appreciate how hard everyone at Knoll is working, and want to thank them for all they are doing. So be safe, everyone. Thank you for your continued ownership and interest in Knoll, and we'll look forward to talking to you at the end of the third quarter. Take care, everybody. Have a good evening.
Ladies and gentlemen, this does conclude today's conference. Thank you for participating and have a wonderful day. You may all disconnect.